Hamilton here with the Trading Initiative. Today we're going to go over some of the best looking stocks that are outside of the United States. 1 day per week, we take 25 to 30 minutes out of our day and we look at what's trending outside of the United States. Is there anything that we should be paying attention to? And you've been trading the market over the last couple of weeks. I'm sure you're well aware that there are a lot of movers outside of the United States right now, particularly in China, right? So what we're going to do here is we're going to look through a couple of those, but we're going to put a special emphasis on China. Obviously, the narrative right now is to own China, although we are seeing not as much positive retail sentiment in the space than I would have expected given the recent moves in price. I think the drawdown from September until today really took a lot of the wind out of the sails for retail wanting to own China, but I'm here to hopefully shine a different light on some of those types of trades. So without further ado, here's our international heavy hitters report. As you can see, a majority of these names up at the top, filtered by proximity to 52-week highs, are banks. Yes, I understand. The economy of Europe, for example, all the different countries are notoriously terrible right now, but for whatever reason, their markets are continuing to scream to all-time highs, and they're being led higher by financials. So if you want to short the market because you think that the economy is bad, feel free. You're probably going to continue to get steamrolled. We have Spain on the list. We have Chile on the list. We have Argentina on the list. We have England on the list. We have China on the list. We have Southeast Asia on the list. I believe it's Singapore. We have Sweden on the list, Spotify. Bunch of different countries on this list, all breaking out into 52-week highs or very close to 52-week highs, and a wide array of sectors and industries. We have financials leading, but we also have internet retail, specialty business services, building products. We have a lot of gold names on the list. We own a lot of those gold names inside of TTI. We have some medical names, some consumer staples related names, some communications related names. So really, this particular scan is telling us that while the media continues to tell us that international stocks should not be doing well because the economy is not doing well, as a matter of fact, international stocks are doing great. They're doing just fine. As a matter of fact, I want to prove that to you really quick. I want to go over to Koifin, and I want to show you guys something really quick. Now, I understand tariffs are scary. Trump has come out and said he wants to slap tariffs on everybody, but I want you to take a step back and look at the actual data really quick, something that we did earlier today. If we actually go and we pull up the countries and we take out all of them really quick, and we just add in the names that Trump particularly targeted. We'll put in Canada, we'll put in Mexico, and we'll go and put in China. These are the three main names that Trump kind of talked about tariffs related. First of all three of them outperforming the United States year to date. But let's actually go and look from the date that he started talking about tariffs, the 31st of January. We'll look at it to today. Since Trump announced potential tariffs across Canada, Mexico, and China, all those things have done are rally. So if you're shorting these stocks due to tariffs, you are now trading against the trend. The trend over the last 2 weeks is up across every single market that Trump is threatening with tariffs. I'm not here to explain why. I'm here to show you that it's happening. You can disagree with me all you want, but that's not the type of trader I am. I would prefer to trade with the trend than against it. It tends to be an easier trade. So what I want to do here is I want to actually build a scanner really quick, and I want to just look at some of these leading Chinese-related names in particular. We'll do optionable and shortable. We just did a big, long webinar, 45, 50 minutes last week, highlighting a bunch of these Chinese plays, but they're starting to break out now. So those names that we were highlighting last week are breaking out now, and now there's an opportunity to actually go and own a couple of those. I'm going to talk through those right now. So let's throw a volume requirement on here, over 500,000. And let's just go through the list. We have 53 names. A lot of these names are giving us entries either right now or this week. So we're going to start with EH. Love this particular setup. Small cap, aerospace and defense related name. I know it says software. Aerospace and defense related name. This is a stage 1 and 2, a stage 2. Exact same setup we took last year, or 2 years ago, with CrowdStrike and Uber. We cut the range in half, going back to the 2021 run-up. We bought above range high. Same idea as AppLovin as well. All three of those trades worked out very well for us over the last 2 years. App, CrowdStrike, and Uber. Here we have EH breaking up and over that 24 area, which is kind of the halfway between that 2021 range that we set here and then the 2022 bear market range that we've set over the last 2 or 3 years. We're now currently breaking out RSI is in the most overbought territory that it's ever been since going back to 2021 at least. This is very good for momentum and breakout style traders. We want to own this above 24, price targets of 36, 57.5. Why would you not want to own this? Obviously, it's up today 20%, so try to buy it on weakness, particularly if you're looking at options contracts. Buy pullbacks, but as long as we're above 24, there's no reason not to own this. Big one on the list that everybody wants to always talk about is BABA. We like BABA above 120. We could be there later today. We will be opening up a position in BABA just like everybody else, but we're going to make sure that we defend it correctly. Risk management is key. For those of you that have argued that BABA's been undervalued, congratulations. It's only taken you 3 years to finally be right, but guess what? We're on board now too, above 120. Simple fact is we don't want to own a stock that's range bound. We want to own a stock when it's paying us. That's above 120. Price targets of 158 to 158.5. Next stop up 220. RSI once again overbought. Trading north of an upward sloping 200-day moving average. We're trying to take this out of a stage 1 into a stage 2. We like BABA as well. There's a bunch of these style of trades that you're going to see. These stage 1 into stage 2s. ATAT, a trade that we opened up a couple of days ago, up into all-time highs today. Very simple IPO range breakout high. Above 29, you own it. Price target 37.5. And then up in La La Land above $50. This is a good options trade as well. You're in big blue skies. It's relatively cheap, lots of volume and open interest on certain contracts at 4.7%. This thing is a great shares trade as well. Lots of volatility. There's 3 breakouts just on the first page here, right? There's an incredible amount of Chinese-related stocks that you're going to want to own if this thing actually breaks out into a cyclical new uptrend. QFIN is another one that we've owned a couple of times. You can see that we originally owned it at 26.5. A couple people added in at 37. It continues to press up in towards 52-week highs. YMM is another one that we've owned. Full Truck Alliance, it's a software-related name. Own it above 950. Price target of 12.80 to 13 bucks was tapped a couple of days ago. Next PT up 18. Looking to reposition ourselves above 13 bucks. Nice big round number. We get back up and over there with YMM. We want more. Bullish momentum regime. Trading north of an upward sloping 200-day moving average. Looks absolutely fantastic. Once again, guys, you can just go through this list and you can find a bunch of different names that are all setting up to own. XPEV, a name that we opened up a couple of days ago as well. We like this above 15.75. Price targets of 21.75, 27.75. As long as we're trading north of this horizontal level, we want upwards exposure. Once again, bullish momentum regime, trading north of an upward sloping 200-day moving average. All of these have an incredible amount of options opportunities as well. You don't need to go and trade shares if you don't want to, but at a 4.31 ADR, totally applicable. These things move, right? They're Chinese. They're higher beta by nature. We like JD as well, but we like it above 42, a name that we originally opened up way back here as it broke above its 200-day moving average back in September. We were able to turn those contracts free. It was an all right trade. Didn't pay us out huge. We want to get long again above 42. Rising 200-day moving average, the beginnings of a bullish momentum regime. We like this up to 55 and 76. So there's 6 trade ideas right off of the bat. Go through the options chain, figure out which names you like in particular, own them. Don't be afraid of the volatility. And let me go ahead and express something before we call it a session here. QWEB is your internet Chinese ETF. This is something that we use to kind of track the stage 1 into stage 2 idea. If this goes, which it started to in September, pulled back, but we have this really nice series of higher highs and higher lows. We really like this. We expect 43.50 to be hit next. If this goes, this would likely represent a cyclical bull market breakout, meaning this is not going to last a couple of weeks. This is going to last a couple of quarters to a couple of years. This is a massive 2 to 3 year stage 1 accumulation base. These things don't break out and then fizzle out very often, particularly if you're looking at a broad sector like China. This is not an individual stock. Broad sector. FXI is another look. This looks at large caps, gets rid of some of those small mid-cap names. Only large caps also breaking up and over 33.5, which is our trigger as well. But if we add an extra component here, the relative strength we're seeing in Chinese-related stocks against the S&P 500 is there. So on both an absolute basis, breaking up and over kind of our trigger to get long into a potential cyclical breakout, we're also seeing over the last year an increased trend in Chinese large caps outperforming American large caps. Large caps from the United States, the S&P 500, right? So if the opportunity cost continues to grow in owning American-related stocks, you're going to see profit seekers shift that liquidity into China. You're going to see that because your money is best served right now based in China, at least from a pure performance standpoint. This is not my opinion. We can see it. This particular chart just takes FXI and it divides it against the S&P 500, and it shows us that the rate of change is growing and it's up, right? If we look back through the last couple of years, you see that owning American stocks has more or less paid out over the long term, but we're starting to see a fundamental change in character, a technical change in character and relative strength against American stocks. Once again, lots of different opportunities in the Chinese market. We're opening up a bunch of positions. We've already started opening up positions, but the question that I asked the guys inside of TTI is, what's the bigger risk? You open up some positions in China and then they don't work out. Listen, guys, you're going to lose trades. It's part of doing business. Chalk it up as a missed business opportunity and just move the fuck on. I mean, that's really how you have to deal with this stuff. If it doesn't work. If it does work and you don't take it, you are potentially looking at a 12 to 24 month advance in Chinese stocks where you will be playing an uptrend instead of a horizontal level breakout. This right here, these stage 1 base breakouts, are arguably the easiest point to enter. Very obvious to understand. You know where you're right and where you're wrong. And these bases tend to tell us that financial institutions have had years of accumulation. Financial institutions have been buying the crap out of these related names. You can see it in the volume. Once these things start to go, financial institutions, while they'll still be active, are not actively accumulating it. Now it's time to make some money. This is when things start to get complicated. When every high you buy that gets pulled back on, you think that you're wrong. You run into moving averages. You got to time entries perfectly. You're playing chart pattern breakouts. Listen, guys, the easier entry is just the horizontal level breakout high. We're seeing it once again in an absolute basis. We're seeing it once again on a relative basis. I cannot stress this enough. China is a go. China's a go. I'd rather be a little early and make money over the next 6 to 9 months, 6 to 12 months, than be looking at that particular chart 12 months from now and going, God damn it, I should have owned more. A couple other stocks here on the list that I want to point out. While they might not be big owners now because, well, there's not really an opportunity to own it. Spotify, fantastic name on this list. We've owned this a couple of different times over the last 2 years. Really just a huge ripper here. Out of Sweden, software-related name, right? First price target up was 523 off the 350 breakout. We nailed that. We're looking for an opportunity to potentially get in. Maybe if it consolidates sideways for a couple days or weeks here, we can buy the rebreakout. Next PT up 805. And then a name that we just started accumulating, Shopify. So we started buying Shopify yesterday. Yesterday gave us a really good opportunity to enter somewhere down here near the lows. Market came back and said Shopify earnings weren't good, but we liked the potential breakout off of this island fractal that Shopify is giving us. We have the catalyst on the backside. We don't have to worry about a negative ER anymore. We like this trading north of a 200-day moving average, upward sloping within a bullish momentum regime. Shopify, Canadian. So Canadian, internet-related name, software-related name. We have a Swedish internet-related name, software-related name, both of them continuing to break out into new 52-week years. Look at how beautiful it trends. If you're a trend follower, CX is a beautiful name to own. This is a Mexican cement name. There's lots of stocks inside of the Mexican ETF that you can own as well. Once again, tariffs were supposed to hit Mexico and Canada really hard, and yet all we see are stocks rallying. I like CX on a move above 7. I'm willing to sit here and wait for a potential PT at 9 or maybe even some new highs at 10. Okay, so a bunch of different stocks there. I named 6 or 7 different Chinese-related stocks, a Canadian stock, a Swedish stock, a Mexican stock. We have internet stocks. We have software stocks. We have material-related stocks. China has a bunch of different stocks as well. We have everything from consumer discretionary to tech, right? Lots of different things working in the market. If you're only focused on the American market right now, I think you're doing yourself a disservice. I really do, especially if you think that the dollar might have a possibility of falling back within the range. Underneath 107.5 or 107, which absolutely could happen. I have no idea, but if it does, that will be a tailwind to emerging markets and international stocks. We're already starting to see it right now. So you tell me, are international stocks leading the dollar, or is the dollar setting up for an epic fake out only to rally higher and crush all of the recent strength in international stocks? I don't know what the right answer is. Okay, so for the next minute or two, if there's any questions, feel free. BABA earnings, next week. I think I prefer BABA, above 120, but I know we've talked about this inside of the Discord a lot, and if you're inside of TTI, we're going to talk about it more. Owning China a little early and then holding through some of the whipsaw and volatility that comes with these breakout points, I think is the better trade. If you want to time this perfectly, I think you're going to get chopped to shit. Everybody that rushed into this trade last September, Like I said, the wind came out of the sails. It was very tough. If we look at just Queb in general, this was the biggest inflow of capital into Chinese equities on record, by the way. This move right here produced a breadth thrust that typically signifies a change in character of trend. Now, over the last 3 or 4 months, we saw a bunch of these stocks come back down and get discounted. But once again, primary trend does appear to have changed higher. I mean, for 3 years, we traded sideways. Now we have a series of higher highs and higher lows, an upward sloping 200-day moving average over the last 6 months, which is not common. Look back over the last couple of years. Upward sloping 200-day moving average is not a regular occurrence. And then once again, we have a lot of bullish momentum coming in. So I think there's a change of character here. I think we got to own Chinese stocks, but more so international stocks as well. Don't be afraid to look outside of the American market. And if it's something we own, I'll shoot you back an email. I'll let you know where we bought it. All right?